Welcome to the latest Motley Fool scoreboard. I'm Anand Chakavlu. We've got longtime fools Toby Bordelon and Lou Whiteman giving a 1 to 10 rating to maybe the most divisive stock and CEO in the market, Tesla. Ticker symbol TSLA. Let's talk about the business first. We're going to talk about competition, industry, scale of 1 to 10. 10 is invincible, 1 is hopeless. Toby's given Tesla a 7 and Lou's given them a 6. We'll start with Toby. We'll go with the higher score. What do you got, Toby?
Well, on Tesla, I think is undeniably the strongest EV maker in America right now. But in terms of automobiles, that's all they really offer, and the market is a lot more than EVs. Plus, their options are, I think, somewhat limited in other areas, the options they offer on their vehicles. So that does limit their ability to grow their market share at the moment. Still, though, they are dependent on government subsidies too, so you've got that issue. Solar's strong, but there's a risk of commoditization there. So that's why I went with a 7. I like what they're doing, but there is some limitations that I see.
I mean, my score on automotive alone would have been below a 6 because yes, they're the premier EV maker, but EVs are stale. And frankly, Tesla's lineup is stale. A lot of their core products, not Cybertruck, not fringe product, but core products really need a refresh. The thing that really helps me here though is the hopefully more than an auto business here. Energy revenue up 52% year over year in the most recent quarter. It's still just 10% of sales, but the overall business, they got to fix the auto business, I think, but there's still a lot there to like. It's definitely better than a coin flip for me.
I didn't hear anything about robotics or AI. Are you both kind of rounding that to kind of 0 for the time being?
Yeah, well, yeah, when it comes, we'll look at it.
All right. We'll move on to management. 10 is Warren Buffett. 1 is Homer Simpson. Lou's giving Tesla a 6, Toby a 5. We'll start with Lou.
Yeah, I'm a 6. It might seem low because Elon Musk is a visionary. He willed the EV revolution into existence. And yeah, so as a visionary, he's a 10. The issue is for me is I'm not sure a visionary is what Tesla really needs right now, or at least it isn't the only thing Tesla needs. The company desperately needs someone to do the boring stuff, make production lines run efficiently, bring new products to market on time, plan for product cycles well in advance. And while Tesla does have some skilled managers beneath Elon, his track record of keeping them is not so great, and nobody has the power to act without his approval. So overall, visionary 10, day-to-day operator, something close to a 0, average it together and give him the benefit of the doubt. I'm at a 6.
Yeah, I went basically the same way. I give him a 10 for being a visionary and his ability to actually motivate people to do things they probably wouldn't be able to do at other companies, quite frankly. But in terms of his political activities and his online antics, which can be a distraction, and then his management style, which may drive some people away, I said, that's a 0. So I get 10 and 0. We go with a 5. And unlike Lou, I did not give him the benefit of the doubt. So I just stuck with 5.
Financials. A 10 is a fortress. A 1 is yikes. Both of you have a 7. I'll let Toby go first.
Yeah, Tesla's profitable, they're cash flow positive. They look to be in very good shape relative to other automakers. Last quarter's beat was driven by selling carbon credits. You take that out, it was a little bit of a miss. So that's why I brought them down a little bit. Sales are still in a slump. Costs are going up. That's why it's not higher than me. But overall, it looks very, very solid to me. So 7.
Strip out those carbon credits, you still have more than $2 billion in free cash flow. And that is the lifeblood for an automaker. A lot to like here. This is a capital intensive business. So you kind of have to be careful when you look at just cash balances, but they do have 30 billion plus on the balance sheet, which is plenty. A lot to like here.
Toby, let's talk valuation. How well will Tesla stock do over the next 5 years? And how safe is it? A 10 is a sure thing. A 1 is a lottery ticket.
In terms of returns and on, you're asking me to do the impossible because the stock is often so disconnected from reality. So it's kind of a crapshoot guess here, right? But, because it is your show and I do have to give you a response, I'm going to go, I think, 5 to 10%. I think they're not going to hit all those targets Musk is targeting in the time frame he's targeting. So the market's going to be a little disappointed. So I think we're a slightly under market perform from here. In terms of safety 4, and let's be clear, they have cash, they're profitable. The company is not going bankrupt. take that off the table. But man, this stock really, really looks expensive to me right now. So when I say a 4 as safety, I mean that in terms of the safety of your investment and your returns, because I think there's a little bit of downside here.
I've done a 5 to 10% too, which is really funny to me because, looking at Tesla through the years, slow and steady is the least likely outcome based on past history. And yet both here we are. This is a company that has always been about the extremes, but coming out of the autonomous event, there wasn't much movement in the shares. It seems like the market is more interested in waiting and seeing for results instead of just jumping onto the vision. The automotive business is a slow grind if that's what's going to drive it for now. Yeah, market matching or slightly beating, but nothing great. For safety, I'm at a 6. Toby's point is well made, but as I said, cash is king here. This is a business with a lot of cash. I could argue over valuation forever, but the company itself is durable.
Top it time, Toby. Is there a company you like better than Tesla in their space?
Well, I really want to say Ford here because, in part, I think because expectations for them are so much lower right now. So the growth potential perhaps is higher. And they have a ton of built-in brand loyalty that I think at some point, hopefully, will pay off. But honestly, if you were going to look at those two companies and say, based on the numbers they're putting up now, based on the results now, which one do you like better? Tesla's business looks to be in better shape, honestly.
Not sure I can say I like this better right now, but the one on my radar and the one I want to like is Volkswagen. Because honestly, Volkswagen is a mess right now, guys. Down 37% since its June highs. But this is sort of keying off a lot of hard work that needs to be done to take the costs out, especially in Europe. What you have is a fantastic global brand with amazing reach, key investments in future technologies, including QuantumScape. There is a great long-term winner here if they can get their act together. So I'm watching and maybe thinking about jumping in if they can.
That's just because neither of you said GM, but Travis Hoyam and Matt Frankel probably would have. But thank you to Toby and to Lou. They've given Tesla an overall score of just 5.8 out of 10, which is actually about what Lou and Asit Sharma gave it last time. They gave it a 5.9. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Lockheed Martin. Till then, Fool on.